Hello and welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We are on location at NCC The Classic, which is underway at the Buffalo County Fairgrounds. Some great cattle shows yet to come through this weekend for the youth of the area. Well, we're going to look at a variety of different things, including talking like we always have been, kind of getting an update when it comes to tariffs, but also talking about the aggressiveness that's happening in South America, especially as they are into harvest and planting of that safrinha corn crop. Add to it, China looking to buy some of those newer beans, which means they're not coming from the United States. We'll also talk a little weather action, not only in South America, but what we're seeing here in the States. And we had a cattle on feed report that came out on Friday. We'll get those numbers as well. Just to give you a quick side note, you're going to hear the auctioneer chant going on in the background of me as they are in the process of selling pens of commercial heifers this afternoon here at the show. So let's stick around because we've got more coming up right after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again as we take a look at this market trade from this week. We're being joined by Sue Mart. Sue is with Ag and Investment out of Clarion, Iowa, and Don Roose with U.S. Commodities, who also, like me, is on location. He's just in a much better place right now with warmer temperatures. Wanted to kind of start out because, tariff talks continue to be a part of everything we see in this market trade. Don, I want to start with you. Kind of what is your take on what's going on right now with those tariff discussions?
Well, I think you can see clearly when we talk the tariff discussions, they're basically positive. It's inflationary. And I think you can see every reaction that we've had every time you talk another country, another tariff, another press. You try to start lower, but then the inflationary buying comes into the market and you push it up into some resistance areas. So positive from the tariff standpoint for now, but that can always change, Susan.
And for you, Sue, what are you seeing in this continued discussion, how it might be affecting the markets?
Well, I think the concern is going to be with having China in a recession and now talking tariffs possibly on Europe. And next Saturday, a week from tomorrow, we will be looking at March 1st and wondering, okay, how are we going to see? What are we going to see? Are we going to see those tariffs go into effect for Mexico and Canada? And some are thinking with all the layoffs that we're seeing in the government, that we're seeing our unemployment drop and not drop, but increase. And also the comfort zone, I would have to say, is showing that there's fears that we could be seeing a possibility of a recession here in the U.S. If that occurs, that could affect demand for beef.
So, Don, you obviously get a kind of a firsthand look at what's happening with this harvest that's underway and the planting the safrinha corn crop with the folks that down there in South America. What are you seeing right now, and what advantage or disadvantage is it throwing at us here in the States?
Well, I think the big thing is harvest is very aggressive. I would say it's 35% done, right now. And the corn planting in the north is, moving along the same way. I'd say it's probably 70% done in the north. And remember, probably 60% of the safrinha corn is in northern Brazil. So it is true that you've got parts of southern Brazil that are dry, but the farmer, for the most part, they don't have a lot of big storage down here. They use a lot of bags also, but the farmer is looking to sell the soybeans, pretty aggressively off of the combine. Just one to do the storage, but I think also, the safrinha with the moisture, adequate moisture, we're getting enough rain in the north that the germination is great on corn. I'd say.
Is there some disadvantages though, because of the fact that this crop is coming in? Obviously, it's got some moisture to it, so the storage opportunities aren't as strong as what we might see here in the States.
Well, you're right. I mean, they use a lot of bags. I would say probably 15% of the crop maybe is stored. It's a lot different than here in the States, where I don't know what it is, 80% or something like that. So it is a rush. And then the commercial is the one that really stores a lot of the crop. But harvest is aggressive. Prices, like I say, for March, Brazil is probably about 50 cents cheaper than the U.S. So they've got to export a competitive advantage, no doubt about it.
So for Sue, as you look at this and the workings of China, obviously they're looking to say, hey, we want these beans and we're going to go to Brazil because we've got that whole tariff thing kind of happening in the background as well.
Well, I think so too. However, back in 2020 and on through the last issue with phase one, China kind of spread their wings and started to look for other alternative markets. And of course, Brazil became a big one. They're also looking at Argentina. And I think that we have to keep in mind, yes, we've got tariffs potential with China. I think what will end up happening is we'll see a reenactment of phase one. There's about $85 billion still left on the table from that. Now, maybe it has a little different twist to it that we don't think about right now, but I could see China coming in. The only thing is, will it be beans that they're after? Will it be corn? I think what it's going to be is cotton when they come back to us.
That'll be interesting to see how that all unfolds. And we look at everything happening acreage wise. I mean, as you and I, and we're all talking, this is mid to end February per se. And it's crazy to hear acreage war discussions underway now, Don. But you talk about that. What are you hearing when it comes to the potential for corn and beans here in the States?
Well, I think number one, you're seeing more acres planted in safrinha corn acres are going to be higher. There's no doubt about it. They have good moisture. Prices are right. So I think that's the first competition that we run into. Well, Argentina harvests first, in April, and then Brazil in July. But, it looks like if you look at it from an insurance standpoint, soybeans are down over $1 versus a year ago. Corn's not that much different. So there's no doubt corn acres going up. And could it be 94, 95 million acres? Could you see the ending stocks go back to 2.1, 2.3 billion? So, that's the future, of course, and we've got to get there.
Sue, what are you hearing? I mean, obviously Iowa, the big soy producer there. Are you hearing some discussions about maybe pulling away from soy and going to corn and throughout the Midwest?
I hear quite a bit of it. And I think that, this last year, though, there were some areas that didn't have good production, that the yields were down, even in corn. But all in all, it was the corn crop that actually still fared better than the beans. Beans just didn't have the good late finish that they normally would need. So I think that we'll see those acres increase. The question mark is going to end up being, what about fertilizer prices and chemical costs, but especially what happens with Canada if we see the tariff enacted here on March 1st.
Don, is there some risk management thinking that we need to do for these markets?
Well, I think when you look at it, it seems early for new crop, but it never is at a certain price level. So I think, for a percentage standpoint at these price levels, particularly on corn, knowing what we have in front of us, we've got some risk premium in for producers to have a percentage sold through some kind of strategies, maybe not tight, is I think just good risk management advice right now, Susan.
We do have a cattle on feed report that came out on a Friday afternoon. Sue, why don't you throw those numbers at us and what you thought?
Well, first off, all cattle and calves on feed came out 1% down at 99%. And the placements came down. It was friendly, actually, bullish at 98%, 2% less. And of course, well under what the trade was expecting for their thought process. But the marketings came in 1% higher at 101%. And while the trade might have been expecting a little more than that, I still look at that and think it's neutral friendly. It's always better if you're marketing more than 100% because you're getting those animals gone.
So do you have any questions? I know you guys are having a great conversation, and Don, I would love you to jump in as well. But Sue, are you questioning some of these numbers that were released in the report because of what we saw happen in January?
Well, I think that I'm not surprised that we came in less than 100%. I just am amazed at how these trade guesses come out over 100%. It just blows me away. With the slaughter the way it is, and we note that packers have been dialing back the kill because they're not killing in the red, or I mean, they are killing in the red. And on top of it, you also have them trying to hold up their beef prices, the cutout prices, and that hasn't happened very well here in the month of February, which is somewhat seasonal anyway. So I think that the report came out justifiable. One would be the hog and pig report. There's the one where I think we're seeing, and we won't know about that until March, but that's the one that I think the USDA is so way off base.
Don, what is your takeaway? I know you just had a chance to look at the numbers before we started this program, but what are you thinking?
Well, I'm thinking that we've got a certain number of feeders that we have throughout the year. We know that from the calf. And I think the big thing was the break evens were very high. So I think what it's really done is this for 1 month, it may be a little bit positive, but you still have the same number of feeders out. I would look for those placements to pick up the numbers that we lost this time in the future report. So overall, the cattle market, feels like you may have put in the cyclical top on this cattle cycle.
All right, Don, I'll start with you on this as we wrap up today's program. What are your thoughts marketing wise, which is hard to believe the last week of February coming up this next week?
Well, I think when you look at marketing, we ran into some tough resistance on the corn. You move back on old crop corn back to where you were last May. You're at numbers where only you could have dreamt you could have been at last fall. So catch up risk management here, no doubt. If Brazil gets a big crop, Argentina gets a big crop, we get bigger acres. You may be seeing some high prices right now that look attractive.
And for you, Sue, what are you looking forward to for next week?
Well, I think first off, we're very in corn. I think we're very similar to the year of 1994-95. And we have a stocks to usage ratio that potentially could take a similar decline if we hit the weather forecast that they're talking about this summer. But that's an if. And I would have to say, if you're doing a little bit of a start on doing some flooring in your new crop, maybe you're selling 10, 15%, whatever, I'm going to recommend that you have call spreads back above on that new crop corn. And by doing the spreads, it'll help cheapen up the premium you're putting in. It'll something you have to manage as you go forward. But if this weather hits, we're going to drop that stocks to usage ratio sharply.
All right. Well, thank you to Don. Thank you to Sue for joining us this week. A quick reminder, information on the show is provided for educational purposes, not intended to influence legislation, government policy, or action. And as always, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been the Nebraska Soybean Board Weekly Market Roundup.